Hey Bowtie Nation, Joseph Hogue here, and you know we love us some ETF investing here on the channel. It's a great low-stress investing strategy, and few do it better than Vanguard funds, with the 5 funds we'll be looking at today posting an average 22% return over the last year, and one producing a 27.5% return. In this video, I'll show you the power of ETF investing for low-stress returns and reveal 5 of the most popular Vanguard ETFs ranked for return. I'll then show you what's in each and who's it for, then how to get an automated portfolio of Vanguard funds right for you. I'm excited to get started, but before we do, I've got to send that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Before we get to that list though, you can find the Vanguard funds we'll talk about on the Wealthfront app, and it's a great way to create that portfolio based on your goals, combining the power of automated investing with customized options that you just won't find with other robo-advisors. It takes less than 5 minutes to get started, and Wealthfront is going to take your answers from some simple questions about investing goals and suggest a diversified portfolio of low-cost index funds. And what I really like about Wealthfront is the level of customization it gives you. You can adjust the overall risk in your portfolio or even the amount in individual funds by moving these sliders to adjust the percentage of your money in each. Wealthfront makes it easy to see all your accounts, from accounts on different investing goals like retirement or general investing, and even linking your external accounts and credit cards to see that net worth picture and how much you owe. The minimum to get started on Wealthfront is just $500 with an annual fee of 0.25%, but you can get $5,000 managed absolutely free when you sign up through my link below. I'll leave a link to Wealthfront in the description below, so check that out. Let's get started on that list of best Vanguard funds, and I'll show you later in the video why every investor needs ETFs in their portfolio. I'll be counting up to the highest return fund, but starting us off with an 8.2% return last year is the Vanguard Developed Markets ETF, ticker VEA. The fund tracks the FTSE Developed All-Cap ex-US Index, which not only took me 5 times to say that, but also means it invests in all the companies in developed economies regardless of company size. That means it's going to be more diversified than some of the funds that you see that might just focus on the largest companies in the US market. The fund holds over 4,000 stocks, with more than half based in Europe and just over a third more based in the Asia Pacific region. So some strong international exposure. And what I like about the fund is it's going to give you access to some of those stocks that aren't traded on the US exchanges. Now, this is probably not a fund that's going to make you rich. Markets in Europe just haven't produced that kind of economic growth that the US has enjoyed, so the fund has lagged, but that 8.5% annualized return over the 10 years, it's pretty respectable, and it's going to help smooth out some of the pain if US stocks tumble. The stocks in the fund have an average price to earnings ratio of just 15 times, well under the 29 times PE ratio on stocks in the S&P 500. In fact, a 46% discount to the US large cap index. Now, foreign stocks generally do trade cheaper than US stocks, but this is a big discount, and it's going to be a good fund for investors maybe willing to sacrifice a little bit of returns for more safety and value. Next on our list of Vanguard funds is the Vanguard Dividend Appreciation Fund, ticker VIG, with a 21.3% return last year. The fund tracks the S&P Dividend Growers Index, which follows US companies that have consistently increased their dividend payment over each of the last 10 years. And that's generally going to mean those larger, mature companies, because those are just the ones with that stability of cash flow to increase those payments consistently. So that is going to limit the number of stocks in this fund, both because it's only US companies, but also because it's only those with that dividend history. And currently the fund holds shares of 268 companies, which is still really well diversified across sectors and some solid companies like Microsoft, Home Depot, and JP Morgan. Now, all you out there in the Bowtie Nation know, one of the first things I look for in ETF investing is the expense ratio. Now, that's the fee charged by a fund to pay its management, and I would usually point that out for each fund. But now with Vanguard funds, there really doesn't seem to be a point in it. I mean, most of these are extremely low and basically negligible. For example, the VIG ETF charges just 0.06% annually, which equates to about $6 for every 10,000 you have invested. That Vanguard Developed Markets, the VEA, even cheaper at just 0.05% a year. So I'll point out the expense ratio for all of these, but it's not really a factor like it might be for some of your other exchange-traded funds. Now, this fund pays a 1.5% dividend yield, which is actually lower than the 2.5% paid on the Developed Markets ETF that we looked at first, but the price return has more than made up for it. The Vanguard Dividend Appreciation Fund has produced a 14.4% annualized return over the last 10 years. So this is going to be a great investment for those that want that stability of dividend growers and the US market. We've still got 3 more Vanguard ETFs to highlight, including one that jumped 27% last year. But why is ETF investing so important? Why do I think all investors should have some ETFs in their portfolio? Because exchange-traded funds give you that opportunity to take the stress out of investing. By holding hundreds and even thousands of stocks in a fund, you don't need to worry about any one stock destroying your returns. You smooth out those ups and downs of individual stocks for that market return. And Vanguard funds are some of the lowest costs you'll find, and using Wealthfront to invest means you get the benefit of that automatic rebalancing and tax loss harvesting as well. Back to our ETF list though, and next is the Vanguard Value Index Fund, ticker VTV, producing a 24.1% return last year. The value fund tracks the CRSP US Large Cap Index, which large cap generally means companies with a market cap above $10 billion. Value is a little more subjective here, but the site says it bases it on factors including the price to book value, price to earnings ratio, and the historical earnings to price ratio for each stock. So pretty general fundamental analysis for value stocks. The fund is heavily weighted to stocks in just 3 sectors, financials, healthcare, and industrials, but those just tend to be your typical value sectors. They have slower growth, but stable cash flows that can be paid out to investors. It's holding shares of 347 companies right now, and as large caps, you're going to recognize most of these: Berkshire Hathaway, JP Morgan, and Johnson & Johnson. The fund pays a 2.1% dividend yield, so a good dividend pick as well as a value play, and charges the lowest expense ratio yet at just 0.04% a year. The average price to earnings of stocks in the fund is just 16.6 times, so definitely in that value territory versus the broader market. While it has beaten the Vanguard Dividend Appreciation Fund in the last year, the longer term is slightly lower here, but still a strong 13.7% annualized return over the last decade. Overall, a good fund for those of you that want less volatility than growth stocks and a higher dividend yield. We've got 2 more funds on our Vanguard list, with the Vanguard Total Stock Market ETF, ticker VTI next, with its 24.8% return. Now, when we usually talk about the stock market, a lot of times we're talking about the S&P 500 index, which is the 500 largest US companies. The VTI though, this is the total stock market. All 4,000 plus companies traded on the major exchanges. And looking at how the stocks are spread out across sectors, it's not quite as diversified as you might expect. Nearly a third of the fund is in tech stocks because that's just how it is with the market. Tech stocks have zoomed higher to be a larger share of the traded universe of US stocks. But that aside, it is still a very diversified fund just on the sheer number of stocks in it. You're going to get that market return along with a 1.3% dividend yield. And besides the second best return of the 5 funds on our list, the Vanguard Total Market Fund has produced a 16.3% annualized return over the last decade. It's a great fund for anyone that wants that one-stop ETF for stock investing, though you might consider supplementing it with some shares of an international stock fund as well. And one of the highest return ETFs last year, the Vanguard Growth Index Fund, ticker VUG, with a 27.5% return. The fund tracks the CRSP US Large Cap Growth Index. So again, you've got those US companies with a market cap over $10 billion, and here growth is going to be defined as that long-term growth in earnings per share, expected near-term growth, as well as sales growth and return on assets. The fund holds shares of 278 companies, but half of these are those tech stocks and a quarter is in the consumer discretionary. So it's following that growth methodology, but I'd rather to see it pick maybe growth stocks from each sector rather than just overall growth, because you get what you see here, a very concentrated portfolio. Now, companies with lots of growth opportunities, they're not going to be paying those earnings out as dividends, rather using that cash flow for more growth. So you're only getting about a 0.6% yield with this fund. It's also definitely not going to be on any value investor's radar, with an average price to earnings ratio of 38.5 times, so even more expensive relative to the market. But it's hard to argue with success. Not only is it the highest return of the 5 funds last year, but it's produced a 19.3% annualized return over the last decade. Overall, just a very good fund for investors that don't mind taking a little more risk and having that lower dividend on growth stocks for that higher return potential. Check out Wealthfront and get a special sign-up bonus with the link below, or click on the video to the right for everything you need to know about robo-advisors and how to automate your investing. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.